Here on set to try to answer that question is Yardeni Research President at Yardeni. Can I set this up a little bit?
Sure, absolutely.
I know viewers just want to hear from you, but you guys had a note back in the fall that really captured my attention, and it was about the Mag 7 turning on each other.
Right.
And I can't help but think, as this plays out, that is still kind of the case, but I'm curious for your thoughts.
I think that's part of it. There's a lot of moving parts here in this story, obviously. I think there's a lot of trepidation about where AI is going and how much we're spending on it. But look, I think the issue here is we're back to the old economy issue about what the Fed's going to do. That's really what's hitting the market. And I gave people some warning. Actually, a couple of days ago, I wrote June soon. I thought that with the Fed likely to raise rates in July, which is still a contrary view, apparently, that would lead to some sort of pullback in the market.
Yeah.
And I think it's a healthy development. I would not want to have seen this market just keep going straight up.
Because you've said your year-end price target, if I'm not mistaken, is still where it is, 8,000.
8,250.
8,250. But you said for the next little while,
yeah,
things are looking too frothy for you.
They were too frothy. I mean, look, everybody thought that this market going up was FOMO. But FOMO would have been really more a valuation multiple going up. I call it FEMO, a fabulous earnings momentum. And so I don't really have a problem with an earnings-led melt-up, but it was getting a little bit rich. And if it just kept going up on valuation, I think we would have a real problem. This is not, in my opinion, 1999, no. 2000 all over again.
And with all due respect to our amazing graphics there with the bear and the sounds, the Dow is still higher this week. The Dow is up 0.25% this week. I know pros don't look at the Dow. Markets are down a little bit, and the win streak is over. But I want to put that all in context, Ed, because we are now in and have seen one of the greatest stock market rallies / comebacks in your illustrious career time. Have we not?
Yeah, absolutely. But it kind of was this year similar to last year. We had a panic attack in the market over tariffs. This time around, we had another panic attack over the war in the Middle East. The war is not over, but in both cases, those turn out to be great buying opportunities. And for all I know, this is going to turn out to be another great buying opportunity. I don't know that it's going to last.
Even this little thing, because I'm going to say something that 49% of our audience is probably going to hate me even more for, which is like, I hope the market sells off a little bit, because when the market goes up every day, Kelly, I don't know about you, maybe you can answer this, I get nervous. You want to see pullbacks. Pullbacks are healthy. Yeah. Selling is healthy. A market that doesn't have a pullback or a sell-off, to me, is an irrational and often unhealthy market.
Absolutely.
Your take?
Well, I think the valuation multiple is high, but it's not high if you agree with me that the economy is resilient, as it has proven to be, and that it'll continue to grow over the rest of the decade. You know, I've been talking about the roaring 2020s, and a lot of people think that means we're 6 years into it. We're actually, if you use your fingers to count it, we're actually 7 years into it. So we got 3 more years after this one, and things are going really well. And I'm talking about 10,000 on the S&P 500 by the end of the decade. I didn't really want to get there by the end of the year or the end of the month. Some people are already talking about 9,000 by the end of this year, and I'm going to leave it at 8,000 and change.
So what do you make of this term, this earnings bubble term that's going around, which the problem with it is it again suggests it's either due to special factors or unsustainable. Yeah. Whereas what we're seeing now, does it give you, and this kind of maybe more relevant with things like the memory stocks, like the chip stocks, is this going to be an earnings bubble that we look back on, or are we building the foundation for
I think growth? AI is the real deal. I think what we're seeing here is just a continuation of the digital revolution, where we're able to process more and more data more quickly, more cheaply, and AI is a tremendous development along that road. It started with IBM mainframes back in the 1960s, and now I kind of think of data as another factor of production. You know, when we're taught economics, we're taught land, labor, and capital, and those are kind of short in supply, whereas data, we're always going to have more and more, and the more we can process, the faster we can do it, the more cheaply we can do it. Guess what? There's going to be, it's kind of like, I call it my Buzz Lightyear theory, to infinity and beyond. There is no shortage of data. There never will be a shortage of data. And the reason these companies, and they're well-managed companies, are spending so much on data centers is because they wish they already had them today, because the demand is definitely there.